morning, everyone. Did you know that the metal quietly outperforming both copper and gold in 2026 actually isn't lithium? And it's not even silver, it's actually tin. And most investors walk straight past it, yet it powers everyday data centers, every EV, every solar panel, and the supply is actually critically short with barely any new projects in sight. And now with tin sitting at over 50,000 US dollars a ton, nearly four times the price of copper. I repeat, four times the price of copper. Caspin Resources just reported its highest grade intersection ever. And joining me today is our Managing Director, Greg Miles. Greg, welcome.
Thanks for having me, Gia.
I saw you smiling. Did I get my intro bang on with exactly the facts?
Yeah, I like it.
Fantastic. Now, look, Greg, for investors who are new to Caspin, could you please now actually just give us like a helicopter overview of your company and your flagship Bygoo Tin project?
Well, we are, as you've provided the intro, a tin exploration and development company, and our flagship project is the Bygoo Tin project in New South Wales, and we are unashamedly working hard to develop Australia's highest grade open pit tin project in Australia. So it's a project that is sort of largely gone out of sight, out of mind for a long period of time.
Mhm.
But there's a lot of reasons to think that this could be Australia's next major tin development.
Now, look, I've got plenty of questions to ask you, but let's go back to tin quickly, right? I did some research. Tin had a big pullback in the early 80s, right? Because there was like basically, and since then there's been not many big projects. How does that serve Caspin?
Well, it's look, the history of the tin price is fascinating, and we could devote an entire session just to talking about that if we wanted to. But look, I guess in essence, the tin price was for many years through the 70s, 80s was managed by the International Tin Council, and they sort of effectively
Mm.
operated as a cartel and supported base tin price until they couldn't, and the tin price, which had been sort of artificially inflated for a long period of time, more or less collapsed overnight. And a lot of tin operations around the world pretty much went broke almost instantaneously.
Mm.
And then, so that was in the mid 80s. And so since then, there's been sort of little reasons for tin to pop up and then get smashed again. But it's only in recent times that the tin price has sort of come back due to
Mm.
primarily supply demand fundamentals. But what that means is that since essentially the early 80s or mid 80s, there's been effectively no tin exploration in Australia and probably elsewhere around the world
Mm.
at all. And so it's so for us to go back to the Bygoo Tin project now is almost like a time warp back to the mid 80s, like picking up a
Mm.
project from when it was last in favor and picking up and running with it again. But and so which is also presents a great opportunity, but also we've got all these fantastic new tools. Geophysical techniques have come a long way in the last 10 years, let alone 40 years. So this is a great exploration story,
Mm.
regardless of the commodity. But combining the recent sort of tin price rise with this exploration opportunity, with a project that's showing all the attributes of a tin development, it really stands out, I think, on the market.
Well, look, thank you. Let's time travel back to the present. I know it's been a really fantastic month for you. Your share price has rallied from around 9 cents to nearly 14 to 15 cents, supported obviously by your best ever drill results of 20 meters at 2.11% tin from
Yeah.
107 meters. That's quite a lot of stats. What's driving that momentum? And help me understand, what does 2.11% really mean for us?
Well, look, I think, and so getting back to your last question, most people aren't really familiar with the tin price because it has gone
Mm.
out of sight and out of mind. And what I try to remind people about, or to give context to some of our results, is to think about it in terms that we're more familiar with. And so to that end, with tin trading at almost four times the copper price. A tin grade of
Mm.
2% in copper value terms is about 8%. So 8% copper, which is, that's kind of a mind-blowing kind of number, particularly so close to surface. So it's an exceptional intersection, an
Hmm.
exceptional high grade and high value intersection that has reminded people of what we're doing at Bygoo. Look, thanks for demonstrating or reminding us of the share price appreciation, but the reason the share price drifted had nothing to do with the project. You know, the general junior sector over the last few months
Mm.
has really struggled, primarily, due to a lack of liquidity, and it's more macro than micro, and it's been really frustrating for myself and probably a lot of other MDs and CEOs who are doing good work. We knew fundamentally that our everything behind the scenes has been going brilliantly, and so it's nice to put a result out like this and remind people of the value of
Mm.
our project, and well, not only reminded, but also to set a new benchmark, I guess. It was our best ever intersection by a considerable margin. It's the third highest in the project to date. So a fantastic result. And since then, we've also put out another high grade intersection, another 20 meters at 1.79. That included a single meter at 14% tin, which is the highest single meter assay in the entire project. Um,
Mm.
so there's been a lot of drilling at Bygoo that goes back through to the 1970s and whatnot, but nothing has been as high over a single meter as that one intersection. So I think it reminds people this is still an exploration discovery story. You know, they're kind of rare. They're not common, and
Mhm.
so it's a great position to be in. You know, it's a development story, but with a fantastic exploration upside story attached to it.
Now, sounds like tin has been a bit of an underdog, right, compared to all the other commodities out there. So, why do you think that Caspin is so well positioned to actually benefit this, especially when the sector is so under the radar?
Well, we've got so few players in the market.
Mm.
There's only a handful of tin developers. You
Hmm.
can count them on one hand. We sort of differentiate ourselves from some of the other players because we're mostly exploring close to surface. We're an open pit type explorer at the moment rather than
Hmm.
underground. People might be familiar with, say, Stellar Resources. They're
Hmm.
exploring essentially an underground mine in Tasmania. Um, our differentiator is that we're exploring for a near surface environment, and our grades support that. Our grades, well, as I said before, we're trying to develop Australia's highest grade open
Hmm.
pit tin project in Australia, um, of which there are only a handful anyway. So there are other explorers, but no, there's only a handful with a resource, and we're actively trying to grow that resource. So we're an active company, a lot of
So,
exploration
look,
in 2026.
when we had Stella on as well, but I want to focus on Caspin, you've mentioned the same things. There's so few players. Why, when it's 50,000 US dollars per ton, why do we still have so few players?
I think it goes back to my earlier comment about no exploration for it for such a long period of time.
Mm. Hmm.
There hasn't been a lot of companies work these projects,
Hmm.
and so I think tin hasn't been sexy for a long time until recently. And so it hasn't attracted the investment. You know, that's pretty much what it comes down to. It is certainly attracting investment now.
Hmm.
I talked to a lot of specialist funds, people who are very much looking for critical mineral opportunities,
Hmm.
and this certainly appeals to them. As you've stated before, tin is used is essentially a technology metal,
Yeah.
and there's growing applications. So It's quite surprising. Look, I think the best of the tin development opportunities have been taken up by that sort of small handful. The
Hmm.
rest are sort of more earlier stage exploration opportunities. I like to think we've got a bit of both. We've actually got a large land holding that surrounds our resource, our Kelpie tin deposit.
Hmm.
So we're providing a bit of a mix of a tin development story, but there's a swag of exploration targets or earlier stage targets that could potentially be other new deposits um, to support that Kelpie development.
Got it. We'll talk about Kelpie shortly. Now, one of the standout announcements we recently just spoke about was the discovery at Errol's zone, including what you described as like Caspin's best drill intercept to date. Why is this so important, like such this discovery and such a milestone for the Bygoo project?
Well, there's a few things.
Hmm.
Partly, the Kelpie deposit currently is in three parts, and that's because that's where the drilling is. And the drilling was focused on surface expressions of mineralization, so essentially where the historical mines were. Yet there was these sort of large gaps between these essentially lodes in the resource. And, why is that? It makes no sense to us when we look at it. And sure enough, we did sort of geophysical surveys and whatnot and could see similar features that host mineralization in these areas where there wasn't any drilling. And so we had a concept which we've developed, we've drill tested, and it's come off. I mean, that's a great success story. But not only is it just a great technical success, the real kicker is the fact that we found a zone of mineralization in an area that previously was treated essentially as waste. So our resource is reported within what we call an optimized shell. So open pit mining parameters are wrapped around this resource so that we know that it's going to be economic to develop.
Hmm.
Um, and this Errol zone sat essentially in part of this pit shell that was considered waste. It's clearly not waste. It's there's another part of the resource. It's highly mineralized. It's probably one of the richer parts of the deposit. So that will have enormous implications for mining economics. And so when we come to our next sort of resource update, which isn't too
Hmm.
far away, I think it will have a significant implication for what's economic from a resource point of view. And then later on, when we get to sort of feasibility studies and whatnot as well. So it's a fantastic discovery story and gives
Hmm.
us so confidence to go and look for similar geophysical features or whatever the case may be elsewhere outside of Kelpie, in the near Kelpie environment, but also across the project area. So a great discovery story.
So does that, I guess the next question really was, what caught our attention was that these intersections actually sat just right outside your like envelope and the resource envelope. So does it mean that this could be the beginning of something even much, I guess, greater and which could lead to even further resource updates?
I think, yeah, absolutely. I think we've always been confident that we'd see a significant increase in our resource tonnage.
Hmm.
Um, I think what we're also seeing is, just looking a little bit further afield, is we we're mostly focused on the near surface environment, which is between the resources or along strike, but clearly at 2% tin, that's an underground grade. That's a grade that could easily support an underground operation. So, um, that's an opportunity for further down the track, but this
Mm.
could be something quite substantial, beyond what our intermediate sort of targets are.
Got it. Now let's go back to Kelpie. The resource grades is 0.5% tin. Which is surprising because it's still wanting a higher grade open pits in the project world globally. So how does this compare with its peers? And help me understand, how can you say zero point 0.5 is high grade? Like you said, 2% was 8%, so what's 0.5%
Yeah,
here?
well, yeah. So let's go back to that equation. 0.5% is about 2% copper,
Hmm.
um, which is economic every day of the week in an open pit
Yeah.
environment.
Okay.
All things being equal, there's copper operations that mine open pits sub 1%. So it
Okay.
is a high grade. It doesn't require a lot of metal when you're close to surface like that. So
Mm,
look, there are other projects out there much lower grade. To be fair, we're a tin only project.
mhm,
Sometimes you get other metals associated with tin deposits, which can improve the economics. So commonly things like copper or silver, tungsten. Kelpie is a little bit unique in that it's essentially a tin only
mm,
deposit,
mhm,
which might sound like a negative, but actually from a processing point of view, that's a positive. It makes it an easier
mm.
processing solution. So yeah, we're easily Australia's highest grade open pit project. There are probably some other ones similar elsewhere in the world, but for now, Kelpie stands out from the crowd in Australia.
Okay. Talk to me about your processing, right? Like I read from your deck that your metallurgy has delivered strong recoveries from a relatively simple processing flow sheet. Why is that such a competitive advantage when it comes down to production?
Well, this is the key to tin projects
Yeah.
is basically tin. You need tin in a mineral called cassiterite, which is essentially a
Hmm.
tin oxide. And the unique characteristics of cassiterite is that it's very dense and
Okay.
much more dense, 2 to 3 times denser than the surrounding gangue minerals that you're trying to separate it
Mm,
from. And so you do that using gravity techniques, essentially
mm.
washing and screening and whatnot, which is very simple technology. It's about as simple as it gets, to be honest. Um, and so provided you can extract most of your ore through
Mm,
those sort of techniques, you're well on the way to an economic processing pathway. And so we demonstrate that we can recover almost 60% of our metal just through gravity separation.
hmm.
There's some improvements on that network still to be had, I think. We'll probably get it
Hmm.
over 60%. But that's certainly kind of a benchmark for gravity processing. But if you find yourself, oh, and sorry, so the important part of that is that it's relatively cheap to do that. So you're uncovering 60% of metal relatively cheaply. But if you find yourself in a high tin price environment like we are at the moment, where the tin price is well over $50,000,
Hmm.
it may actually be economic to try and recover as much as you possibly can. And so the downside to gravity separation is that it's hard to recover some of the very fine tin.
Okay.
But the solution for that is to do flotation, which is, I'm sure people have heard of flotation being used for nickel and copper and other base metals. Same sort of processing can be applied to tin. So you apply flotation to the gravity
Mhm.
tail, a very small part of the total feed. And we're able to recover another 25% of the metal through flotation to give us an overall recovery of over 80%, 83% to be honest. And and that's unbelievably good at this early stage of the project. And so I guess we benchmark ourselves by producing operations. So we
Mhm.
look at producers in Tasmania and elsewhere around the world, and they sort of operate in a region of around 75 to 80% recovery. And so
Mm.
we've already demonstrated we can get there. So what started out as a de-risking exercise, proving that it's all well and good to have a resource, but can you extract it? Well, yes, and we can probably do it a lot cheaper than what some of our competitors or peers can. So that's our advantage. Um,
Now, talk to me more about price volatility of tin, right? I mean, at the moment, figuratively speaking, it's all happy days with, above 50,000 US dollars per ton. Is your project supported if that number dips below?
oh, absolutely. I mean,
Okay.
$50,000 is unbelievable. It's like Christmas. It's Christmas
Yeah.
every day of the year at the moment.
Yeah.
We look when we first took on this project, the tin
Mm.
price was around 30 or 32,000.
Okay.
Um,
Now I get it.
and we thought that was pretty healthy.
Okay.
And so the last resource that we put out, I think the tin price is around 35 or 36. again, we're pretty happy with that sort of pricing. So where it is at the moment is probably, look, I think it's the fundamentals will probably support it at that point. But even if it doesn't stay there, I think our project will still be economic. We'll probably stress test the project at a range of pricing, probably starting around the 30,000 mark. But I suspect that even at 40,000, the project will be very economic.
Got it. Now, beyond Kelpie, you've highlighted targets like Moss and Ardlethan East. How significant could this be unlocking additional value for Caspin?
Well, so the Bygoo project sits in the Wagga Tin Belt,
Mm,
and the Ardlethan Tin Field, if you want to call it that, was a quite a significant mainland Australian mainland producer.
mm,
There was a lot of historical mining of tin for decades, in the early 1900s and even more recently through the 60s and
mm,
70s, until that tin price collapse that we talked about earlier. Um, I think there's a fantastic opportunity to have a district scale mining operation here. And
mm,
so, whilst our short term goal is to um, prove a viable standalone project at Kelpie, which I
mm,
think is about a 30 to 35,000 uh, tons of tin total, contained tin resource. I think that's an intermediate target. That will prove a minimum viable
mm.
tin development, but
Yep.
that's not where that's not the ultimate goal. I think Kelpie, the total endowment we should be aiming for is more like 50, particularly when we start to consider underground potential as well. But then how do you get the project to the next state, the next
Mm,
level? Something that's really significant on a global scale. Well, you,
mm,
you need to get to 100,000 or you need to get to 150,000. And so, in truth, that probably warrants a new discovery. Um, and and I guess what we're working towards is identifying prospects that might have that discovery potential. Now, thankfully, our project surrounds the Ardlethan Tin Mine, which was a significant producer in its own right
mhm,
until the mid 1980s. I think the total endowment there is well over 50,000 tons of contained tin. And our project goes right up to the doorstep. And so it's an old adage, the best place to explore is in the shadow of the headframe. Well,
mm.
no headframe at Ardlethan, but there's a pit, and our and our tenement boundary goes right up to the edge of that pit. So there's a fantastic opportunity to find additional Ardlethan style deposits within our tenure. And not only that, we're also seeing, so that's the Ardlethan East area, and Moss is a target that we've just recently developed only a short distance from Kelpie. It's more or less a Kelpie lookalike. We've recognised it through soil geochemistry,
Mhm.
geophysics, has all the similar sort of attributes that Kelpie does, yet no effective drilling. Quite remarkable. That, and I guess this is the amazing thing about the project is not a lot of modern exploration in
Mm,
areas that are clearly prospective. So both these two prospect areas have good potential for new discoveries. If there's anything like Kelpie, then we're well on that trajectory of something
mhm,
that's globally significant, and that attracts a whole different type of investor. Um, and then beneath that, there's a suite of very early stage prospects that our guys are kind of working up. Maybe some of our first pass soil sampling, rock chip sampling, things that have never had a drill hole that would fill out our exploration pipeline. You want a suite of a small number of advanced targets and a swag full of early stage exploration opportunities at the other end, and you want to slowly move all of them towards development at the same time.
got it. And look, obviously, doing the research moving into this interview, you previously mentioned, can you elaborate more about like how tin is actually the original critical mineral? Um, and more around, like you said, right, like the actual application, because everyone talks about the greenification, the electrification of the world, but like the real application for tin and why it's actually so critical.
Yeah. Well, look, it's a bit of a catchphrase, the
Mm,
original critical mineral, but the Bronze Age is called the
okay.
Bronze Age for a reason. Tin is a
Mhm,
substantial part of bronze, so it's been used for centuries, and all through history, tin has been really important for technology. So tin was actually stockpiled by the US after World War II. Not a lot of
okay.
people know that.
Hmm.
Um, Interestingly, the US has no domestic production of tin. And I
Hmm.
think this is so. Firstly, as you say, the supply demand equation for tin is fantastic. The demand is there for electrification. It's the same electrification thematic that copper is currently riding.
Hmm.
Copper in terms of wires between points. But once you get to that point, that application, that device, whatever it is, you need tin to hold all the circuitry together.
Right.
So it's not going away. There is no substitute. The substitute was removed years ago. That was lead. Unless you want to replace it with silver, which isn't going
Mm,
to happen, there is no substitute. So the demand for tin is very much tied to electrification and only heading in one direction. The
okay.
supply side is a lot more interesting.
Mm,
And this is really where companies like ours can really get extra leverage because there is very little first world tin production.
mm,
Most tin production comes from developing or third world countries. Um, a lot of tin production out of Southeast Asia. It's alluvial mining. Environmentally, it's not the best. There's a lot of tin production out of Central Africa, a lot of challenging jurisdictions. Australia is one of the world's few first world jurisdictions that produce tin. And as I said before, there's no mainland production of tin in the US. So Australia, New South
mm.
Wales in an excellent position to benefit from this. And so not only is the demand for tin going to be there, I think the demand from a first world source, first world jurisdiction, is only going to increase as people start looking for ethical investments. So I think we're really well positioned.
Thank you, Greg. Now, look, East Coast Research, they've currently got a target price of around 30 cents for Caspin, but your market capitalization at the moment is really only around 35 to $40 million. I'd love your comment about that. And do you think people are now starting to actually finally see value in Caspin?
Well, the beauty of markets is
Mm,
that they're inefficient and it creates opportunities.
hmm.
I think we're much better value than our peers. Now that's
Hmm.
partly because we're at an earlier stage on that development pathway,
Hmm.
but I think all things being, when everything's said and done, I think we are going to have a project that competes just as well as some of our peers. I think that we've run through some of the advantages our project has,
Hmm.
um, and I think it stacks up really well. And so we that value will be appreciated over time. I'm very comfortable that our company is on the right pathway to recognizing value in the fullness of time. So, um, in the meantime, though, it presents an opportunity.
We know.
No
Okay,
follow-up.
so time for accountability, which we discussed earlier before we went on camera. Our investors like to keep you accountable. So for the next 6 months, what news flow can we expect from Caspin?
Well, look, there's going to be some more. Just a few handful of results really from Kelpie still to come. Probably what's most important about that is all the recent drilling that we've released feeds into a resource update. That's scheduled for September. And,
Mm,
I'm quietly confident that we're going to hit our internal milestone of 30 to 35,000 tonnes of contained tin.
mm-hmm,
As I said before, that I think that'll demonstrate a standalone tin development.
mm-hmm.
We also have some additional results coming from the Moss prospect. We're going back there and drilling some more holes. We don't have the results from the first lot of drilling. We've
Mhm.
refined our target from that work, and are going to drill some more holes. We're taking a diamond rig to Kelpie to for two things. We're going to step out a little bit beyond what our RC capability is, and also get some additional geological information from diamond core. Most all our works to date has been by RC, which is great. It's cost effective, but you don't necessarily capture as much geological information as you'd like. So that's coming up as well. That's not really critical to the resource. It's critical for our understanding, our future planning. I think the resource update will dictate what some of our future exploration plans look like, but
Mhm.
we're already sort of planning ahead for what the next phase of drilling at Kelpie looks like. We already know there's a lot more opportunities to test and explore. The summer months are really the best field season at Bygoo.
Mhm.
So, like we have this year, I think summer and autumn will be very busy. Well, it's going to be busy all year, but
Mhm.
those months are when we want to maximise our field activities.
Mhm.
Uh, so, continuing to grow the Kelpie resource even after we provide this next resource update will be key, but also continuing to test some of the secondary targets that we're developing, and even dabble in some of the tertiary targets as well. So bring them along that pipeline.
Mm.
All those things are on our agenda.
Got it. And I guess, for you professionally, in 12 months' time, what would success for Caspin look like?
I think the forget about 12 months. I think if we can hit that resource milestone in a couple of months,
Yep.
that will be quite significant.
Okay.
But in 12 months' time, we want to demonstrate that Kelpie is a viable development project, and I want to have made some more steps towards that. But if we can also demonstrate that there's other, perhaps if perhaps have made another discovery or on the cusp of another discovery, that will provide a step change in value in our company. Like I said, we all our milestones at the moment are somewhat intermediary. The bigger picture is growing Kelpie to its maximum size and making new
Mhm.
discoveries. So,
That's your
and
agenda.
that could be as soon as 12 months. It really could.
Well, thank you, Greg. I guess we'll have to speak to you another maybe 6 months' time then.
We could check in before then, perhaps.
Absolutely. Thank you.
Thanks, Jeff.